Good morning, shareholders. Welcome shareholders and invited guests to the annual general meeting of Elixir Energy Limited. It's now 10:30 a.m. Central Standard Time. My name is Richard Cotty. I'm the chairman of Elixir and of today's meeting. I've been informed that a quorum is present and I therefore declare the meeting open. May I introduce my fellow directors, Neil Young, the Managing Director.
Hello.
Stephen Kellerman, Non-Executive Director.
Good morning.
And Anna Slobata.
Thank you. Hello.
Professional advisors and business parties are Vicky Allison, who's our company secretary and CFO, and Dean Just, our BDO audit partners. The resolutions will be voted via a poll. We welcome Jonathan Kim of Automic Group as returning officer, who will conduct the poll in relation to today's resolution. The notice of meeting was prepared in accordance with the company's constitution and the Corporations Act and was circulated to members on the 28th of September 2021. If there are no objections, I'll take the notice of meeting as having been read. We have had no notice of other items of business for today's meeting have been received, and therefore the only matters our meeting can consider are those matters set out in the notice of meeting. On the screen is the outline of the meeting for your consideration. Let me outline the format of the meeting. There will be a chairman's address. I'll address questions raised at the relevant time, but being before a resolution if related to an auditor annual report or other resolutions, or after the MD's presentation. The second item will be business of meeting. We'll then move to the business of meeting and discuss the accounts for the year ended 30 June 2021. You will then be invited to ask questions of the board and or the auditor. Then we move to our resolutions. The resolutions included in the notice of meetings will be then tabled in order. Voting today will be conducted by way of a poll via Automic Group portal login. We will then formally close the meeting with the MD's presentation will follow, and then it'll be open to general questions. So I do state that you can ask questions on resolutions, etc. at the time. I now move to my chairman's address. This is Elixir's second virtual AGM, and with vaccination rates in Australia rapidly accelerating, hopefully next year, your board may well have the privilege of meeting its shareholders in person. This year, your company met many milestones. We drilled over 11 wells with an impressive success rate of 72.7%. During the year, the company was able to put itself on a sound financial footing. At the end of the financial year, we had 32.8 million Aussie dollars in the bank. We have just successfully completed a first stage production test, flowing gas and water to the surface from the Nomgon 6 well. This test has provided Elixir with the data it needs to plan next year's full-blown pilot production program, and its success represents a key milestone being passed by your company. A lot has been said about natural gas being a fossil fuel. With nearly half of natural gas's consumption being an input primarily for the food and housing sector, this nomenclature is not without ambiguity, as fuel is clearly not its sole purpose. The role of gas in enabling the transition to a net zero future cannot be understated. The physical market for gas has never been tighter. A major structural transition appears to be occurring, for whilst oil prices in the US rose 12% this quarter, gas rose 25% in the US 75% in the Eurozone, and even higher in the Asian region. The JKM LNG spot has risen above US $35 a gigajoule. JKM is essentially the market competitor for the Elixir in the all-important People's Republic of China market. Now more than ever, the vision your board has for the company is being fortified. There is no evidence that the supply of natural gas will outstrip demand in China for the foreseeable future. Nonetheless, Elixir is embarking on ensuring its role in a less carbon-intensive future, with an MOU for hydrogen with the Mongolian government being signed and the initiatives we've taken on renewable energies in Mongolia. This year, we announced our initiative to ensure early cash flows from a small modular gas-fired power station. The year ahead should become a watershed for the company as we begin production testing our discoveries. I join with the board in thanking you, our shareholders, for the support you've given the company as we strive to reward you with the company's performance. And that concludes the chairman's address. During the meeting, questions from shareholders can be submitted at any time. To ask a question, press on the Q&A icon. This will open up a new screen. At the bottom of that screen, there is a section for you to type your question. Once you've finished typing, please hit enter on your keyboard to send. I'll not address the question until the relevant time in the meeting. Also, note your questions may be moderated, or if there are multiple questions on one topic, amalgamated together. Due to time constraints, we may run out of time to answer all your questions. If this happens, we will answer them in due course via email, posting responses on our website. I now move to the business of the meeting. The first item of the business is to receive and consider the annual financial report of the company for the financial year ended 30 June 2021. With the declaration of directors, the directors' report, the remuneration report, and the auditor's report. The accounts and reports were approved and signed by directors, and in accordance with the Corporations Act are received and tabled at this meeting. There is no requirement to formally adopt these documents. However, I invite you to ask any question relating to the accounts and the audit reports. Audit partner Dean Just from BDO is available to assist you with any queries. I will now raise questions on the annual report for the auditors. Are there any questions?
There are no questions on the annual report or for the auditor.
Okay, there being no further discussion, therefore we'll move the resolution to require us to deal with 7 ordinary and 1 special resolution. I appoint Jonathan Kim of Atomic Group to be the returning officer and to conduct the poll. I'll move each motion and invite questions before putting the motion to a vote by poll. Details of each resolution and proxy details will now appear on your screen. Details of the voting restrictions and voting resolution recommendations for each resolution are set out in the notice of meeting. We will now conduct the poll on resolutions numbered 1 to 8. Are there 2 screens on the, does that capture all of them, including 8 approval? Yes.
Yes, that's right.
Okay, thank you. My printout doesn't, because it's over 2 pages. I move the motion to consider, and if thought fit, pass the following resolution as an ordinary resolution. Quote, that the remuneration report required by section 300 capital A of the Corporations Act 2001, as contained in the company's directors' report for the year ended 30 June 2021, to be adopted by shareholders. Are there any questions?
There are no questions on resolution 1.
I now put the motion. Could you please lodge your vote? I believe that's probably sufficient time for lodging the vote, so I'll now move to resolution number 2. It's very hard to tell just looking at a screen. I move the motion to consider, and if thought fit, pass the following resolution as an ordinary resolution. That Mr. Stephen Kellerman, a director retiring by rotation in accordance with clause 6.3 of the company's constitution and being eligible for re-election, be re-elected as a director of the company. Are there any questions on this resolution?
There are no questions on resolution 2.
Stephen, do you want to say anything at all? Or go straight to vote. Okay. I now put the motion. Please lodge your vote. I now move the motion to consider, and if thought fit, pass the following resolution as an ordinary resolution. That Ms. Anna Slobota be elected as a director. Anna, do you want to say anything? Are there any questions?
There are no questions on resolution 3.
I now put the motion. Please lodge your vote. I move the motion to consider, and if thought fit, pass the following resolutions as an ordinary resolution. Quote, that for the purposes of ASX Listing Rule 7.4 and for all other purposes, the 777,778 shares issued to sophisticated and professional directors without shareholder approval on the 29th of April 2021 under Listing Rule 7.1, as outlined in the explanatory memorandum, be approved, and Part B being that for the purposes of Listing Rule 7.4 and for all other purposes, the 1,153,846 shares issued to a supplier of digital marketing services without shareholder approval on 21st of January 2021 under Listing Rule ASX Listing Rule 7.1 as outlined in the explanatory memorandum be approved. Are there any questions on this resolution?
There are no questions on resolution 4A or 4B.
I will now put the motion. Please lodge your vote. I now move the motion to consider, and if thought fit, the following resolution as an ordinary resolution. Quote, that for the purposes of Listing Rule 10.11 and for all other purposes, approval is given for the company to allot and issue 1 million incentive shares to Anna Sloboda or her nominees on terms and conditions in the explanatory statement. Are there any questions?
There are no questions on resolution 5.
I now put the motion. Please lodge your vote. I now move to resolution number 6, to consider and, if thought fit, pass the following resolution as an ordinary resolution. Quote, that for the purposes of Listing Rule 10.11 and for all other purposes, approval is given for the company to issue and allot 6 million performance rights to Mr. Neil Young or his nominees in the allocations and on the terms and conditions contained in the explanatory memorandum. Are there any questions?
There are no questions raised on resolution 6.
I now put the motion and please lodge your vote. I now move to resolution number 7. I move the motion to consider and, if thought fit, pass the following resolution as an ordinary resolution. Quote, that in accordance with ASX Listing Rule 10.17 in clause 6.5A of the company's constitution, the maximum total amount of fees from which the company may pay the non-executive directors of the company for their services be increased by $500,000 to a maximum of $1 million inclusive of superannuation per annum. Are there any questions?
There are no questions on resolution 7.
I now put the motion. Please lodge your vote. I now move to special resolution, and it is a special resolution 8, approval of 10% placement facilities. I move the motion to consider and, if thought fit, pass the following resolution as a special resolution. Quote, that for the pursuant to and in accordance with Listing Rule 7.1 capital A and for all other purposes, shareholders approve the company to have the additional capacity to issue equity securities under Listing Rule 7.1 capital A of up to 10% of the issued capital, open brackets, at the time of the issue, close brackets, calculated in accordance with the formula prescribed in Listing Rule 7.1 capital A.2 and on terms and conditions contained in the explanatory memorandum, end quote. Are there any questions on resolutions 8?
There are no questions on resolution 8.
I now put the motion. Please lodge your vote. I will now give you a couple of minutes to ensure that you are able to lodge your vote before moving to the formal close. Always 2 minutes silence, so it takes a long time. Lest we forget. I now declare the poll closed and charge Jonathan Kim of Atomic as returning officer to count the vote and not get convicted. After the votes have been counted, the results of the poll will be released to the ASX and placed on the company's website as soon as possible. Ladies and gentlemen, that concludes the meeting. Thank you for your attendance, and on behalf of directors, we look forward to updating you as and when new information comes to hand. The formal part of the meeting is now closed, but nonetheless, we still have the presentation by our Managing Director, followed by any answering of any questions you may raise. I'll hand over to you, Neil.
Thank you, Richard, and thanks shareholders for joining in our AGM and listening to the formal part, and now my informal part, an updated corporate presentation on where Elixir Energy is at as at the end of October 2021. So Vicky, if you can tap the buttons to go. Thank you. So this is a summary company overview. We are focused on our 100% owned production sharing contract located in the South Gobi region of Mongolia, just north of the Chinese border. We have a highly experienced coal seam gas team, and we are every day taking Australia's leading skills in CSG to Mongolia and transferring those to our local team and the local subcontractors that we used. Our position just north of the border in the Gobi Desert is actually quite well blessed with infrastructure, large mines, planned pipelines, and electrical infrastructure as well. These factors provide many market options, now including hydrogen, and I'll touch more upon that later. Our strong balance sheet funds an aggressive exploration and appraisal program for many years to come, and we're well ahead of our minimum commitments under the production sharing contract. So here's our capital structure. We have around 900 million shares on issue. Our share price currently is in the high 20 cents. Critically, we have around $31 million in cash as at the end of the last quarter. The team comprises our chairman, Richard Cottee, well known in particular for bringing QGC from a minnow to a giant that was bought by BG and is now operated by Shell, selling gas from Queensland largely to China. My background is a commercial one. I, amongst other things, worked at Santos as a business development manager about 15 or a dozen years ago, assembling its coal seam gas business asset base, which also now supplies gas from Queensland to Asia. At that time, I worked with Stephen Kellerman, who set up Santos's coal seam gas business and is now currently a non-executive director of a coal seam gas peer, Galilee Energy. Our last but not least, our most recently appointed director, Anna. Her career includes working in investment banks, working for junior exploration companies, interfacing with China. And Anna's background from Belarus is at the other end of the ex-Soviet empire compared to Mongolia, and therefore has many similar ex-Soviet characteristics that we benefit from learning from. Okay, so moving on to the project. So as stated, we're located on the Chinese border. The production sharing contract is very large in size. It's 7 million acres or 30,000 square kilometers. And in the past, I've characterized that as being similar in size to the country of Belgium. As you can see, we're just north of roads. Just south of the screen is a pipeline that takes gas all the way from Turkmenistan and Kazakhstan to Beijing. That's around 4,000 kilometers long. We're about 400 kilometers from that pipeline. There's a dotted line flowing from the northwest to the southeast here. That is a planned pipeline from Russia's Yamal Peninsula to Beijing. That is similarly around 4,000 or 5,000 kilometers in distance, i.e. enormously more expensive to move gas from that location than this immediately proximate one. So the current state of play. With very large blocks, I've said, a large block in a coal-bearing basin gives rise to a large prospective resource. We last had an independent update on the prospective resource, and the risked best case, which is the mid case, was 14.6 trillion cubic feet. At the start of this year, we booked a first contingent resource, matching that with a planned electricity generation project. And we signed an MOU with the government with respect to that, and also an MOU with experienced coal seam gas to power developer Clark Energy. In this year, we plan to drill around 20 wells, and we've got around 16 under our belt to date or underway. We have what I call the rinse and repeat model, and that is to use low-cost exploration and appraisal techniques to add gas resources bit by bit, block by block, across the large PSC area. We've just completed phase 1 of a 2-stage production testing program, and it has delivered exceptional results. We've flowed water, gas, we've derived information on multiple factors such as permeability and the salinity of the water, and that is feeding into a planning process just now for a full-blown extended pilot production program next year. So this slide here illustrates the path of our historical drilling. In 2019, the first year of a PSC, we started with 3 wells. In 2020, we undertook 7 wells. Now in 2021, we're aiming for 20 with 16 under our belts. What we see here is exponential growth during a time of COVID, but one that has been managed well, and those wells have delivered exceptionally high intersection rates, with in 2021 to date, 82% coal intersected at the CBM depths. Seismic has also increased exponentially. We started off with just over 100 Ks in each of 19 and 20. This year, we are halfway through the second stage of a seismic program. We're now looking to acquire more than 500 kilometers of 2D seismic in 2021. So that expanded program was started off with a 200 kilometer first phase that has now been processed and interpreted and is giving us an inventory of drilling targets for the future. The second stage program is around halfway through and will add to that inventory base. That is the purpose of the program. It's a very low cost way of expanding our geological knowledge and giving us future targets for the rinse and repeat model. Our accelerated drilling program, targeting 20 wells, comprises both exploration and appraisal targets across multiple subbasins. To date, we have added 4 gas-bearing subbasins in the PSC area, and we aim to add to that target as we go along through our repetitive rinse and repeat program. What we want to do is position ourselves as a leading North Asian gas resource owner in a fantastic location. We have 100% ownership, as I stated earlier. That gives us wide-ranging optionality as to whether we work with others or not, as the case might be. and change our program, accelerate it, move things around as and when we get knowledge. And that flexibility has been enormously valuable for us. So the Nongon 6 well, we just reported the results of this. We consider the results to be game-changing for us. We applied multiple different tests to flow fluids to surface. Ultimately, from 4 separately tested zones, we had a combined rate of 280 barrels of water per day, which from a slim vertical well is an excellent sign of productivity. We flowed early gas. We measured that using a handheld meter. That measured up to 25,000 parts per million. That's an excellent sign. It shows that gas will be released from the formation early, which goes to economics and confirms our prior measurements from cores that this was highly gas saturated. So the significance of this fluid flow, it's our first early stage production test of its kind, and we believe the first in the country. This was successfully completed with remote supervision from Australia, from our own team, and from our subcontractors here, which was an excellent operational result, and one that we think is really becoming a model for the industry that COVID has driven, that things can be done in remote areas online. That leads to cost savings, and it really goes to the commitment of the multiple elements of the team that was delivered successfully. As I mentioned, we flowed gas early. That supports high gas saturation. We believe we've identified natural fractures, and that's a key feature of this particular reservoir, and again will go to cost and go to productivity. The data that we have garnered has enabled an immediate start to our pilot program planning for next year, and a key element of that is managing water, how we store it, how it's evaporated, how big a pond we need, for example. So our forward program for 2022 has many elements that you've seen before, but we will be multiplying them. We aim to have 3 rigs drilling, as we do now, across the PSC area, undertaking both exploration and appraisal wells. Our first full-blown pilot production program will seek to produce fluids for a sustained period of up to 6 months. That'll be gas and water, and we're designing that now in the Nongon sub-basin. We will acquire more seismic across the PSC area, following up on previous targets and seeking out new ones. The results from the pilot production program will be matched with our MOU derived plans for gas-fired modular generation in the Nongon area, and we're working on that in parallel to the planning for the subsurface pilot production area. Lastly, on hydrogen, we're working with stakeholders, including the government at multiple levels and others, with a view to pushing the recently announced strategy on hydrogen forward through the course of next year. So the opportunity in markets. So Chinese gas markets, the chairman alluded to this in his presentation. What we currently see are exceptionally high Asian gas prices, above $30 an MMBTU or a gigajoule. It's effectively the same thing. That is unprecedented in my experience, and has been sustained not just for 1 or 2 cargoes, but over the last month or so. And that's even
US dollars, isn't it?
Yes, that's US dollars, correct, Richard. So in Australian dollars, that's about $40 a gigajoule. And you might recall, those who follow the Australian gas markets, that buyers were moaning when it got to about $10 Australian here recently. What China has said in response to the current exceptionally volatile energy markets, not just for gas, is that security of supply is paramount. The government has ordered Chinese buyers to buy fuels at any price. In parallel, the government in China is reducing its carbon intensity. One of the actual contributors to these high prices is a reduction in coal use. And Inner Mongolia, for example, which is China's province immediately adjacent to the country of Mongolia, it is actively changing its energy mix to reduce a reliance on coal, which drives an increased demand for gas. Now, the volatility in renewables which is another significant contributor towards these high gas prices around the world, has in fact reinforced the powerful role of gas as a long-term bridging fuel to underpin the introduction of more renewables. Another factor that we've seen in Europe is some concern about Russia's dominance as a gas supplier. And in our view, China will not want to equally be too beholden to any one supplier. China is itself accelerating its hydrogen developments. Its 3 national oil companies have all, in the course of this year, announced multi-billion-dollar hydrogen plans. And the extent of China's hydrogen ambitions are such that they're highly likely to need imports. And that's where we believe Mongolia and ourselves comes in. So the competitive advantage here is delivery costs. Hydrogen is physically very expensive to move, and our analysis, or the analysis in fact we commissioned from independent experts, Rystad, indicates that the cost of moving hydrogen compared to methane by boat is nearly 4 times higher. So that means location is so important in meeting the most effective delivered cost. The second biggest issue is, well, the first biggest issue, in fact, on the field production cost is the cost of renewables. And that really goes to the quality of wind and solar and the combination in any particular location. And what we have divined, again, using an independent expert, is that the combination of those factors in the South Gobi is exceptional. So we have deployed Australian equipment called a SODAR, which measures wind and solar to bankable standards in our region. We've deployed it adjacent to an existing transmission line to China and very proximate to Rio Tinto's operated Oyu Tolgoi mine. We started to get data from that. We're considering expanding the deployment of equipment which on a very low cost basis measures resources. Our skills in this area of interacting with governments at multiple levels, with regulators, with communities, are skills which are exactly relevant to moving from gas, but without leaving it behind, of course, to renewables and hydrogen. So the investment highlights, I'll quickly just touch upon these. We have been and will continue to exponentially expand our program. We've established a very low cost rinse and repeat model of exploration and appraisal, which adds resources bit by bit and which we believe can build up to a regionally material gas resource. We are the leading player in the country, but we're very pleased to see others following. The experience of CSG in Queensland was that as a sector builds, it brings more people in, and then that brings more and more people in. It's not a zero-sum game, it's a win-win game. So in conclusion, our investment highlights are that firstly, we have a program that's been materially expanding year on year, and we've been working around COVID very successfully. I can't thank our local team and subcontractors enough for their resilience in that. For the Australian viewers here, what we've seen in Mongolia is a very high vaccination rate, but equally people catching pretty predictably COVID after they've been vaccinated, and pretty much most of our team has been vaccinated and had COVID. They've managed to work around that and the various government restrictions which have moved from time to time. Our rinse and repeat model has added more and more resources. We've now established, as I mentioned earlier, 4 gas-bearing separate sub-basins, and we aim to add more. Of course, in the course of this year, we've significantly increased our financial strength. We now have more than $30 million in the bank. That funds this very low-cost program for a considerable period, allows us to maintain 100% ownership and all the optionality that brings for a very sustained period. Now, it's our obligation to not only be low cost, but also to be safe, to be environmentally responsible, and to transfer skills to our host country, and we have met all those objectives. The channels to market here are significant. There are local needs for gas. The ultimate export market in China I've focused upon is enormous. And as our chairman mentioned, we see no chance of demand exceeding supply in that country. China has a long-term target to reduce its carbon intensity, and gas will play an enormous role in that for many decades to come. But China also does recognize the requirement for hydrogen to play a key role in the energy transition, and we're building upon our existing skill base of relationships with multiple stakeholders to investigate the opportunity to again be a first mover, this time in a different gas, namely hydrogen. So that's it in terms of an update for our corporate presentation. I think there's a few questions coming in. So thanks everybody, and we'll now turn to the questions.
Thank you very much, Neil. Ladies and gentlemen, there's been a few questions raised. The first one of which is, given the outcomes of the last 12 months, are you materially more confident on the company's future to meet the board's ultimate goals? Certainly speaking for myself, with such a high exploration risk, given the extreme greenfield nature of the project and the increased gas prices, I mean, seriously, it does appear to me that gas is going from a byproduct to a prime product and is decoupling from oil over time. That is only positive to the whole of the of our outlook, and the rocks are speaking the right language from last year, and we hope that we can do that without further interpreters being needed. Neil, do you want to add anything to that?
Just a few points, and sorry if I repeat myself. So I think clearly our resource base in multiple ways has increased. Our financial resource base, the resource base represented by the skills of our team in Australia and in Mongolia has been substantially enhanced. And of course, our resource base of discovered gas is building up brick by brick as well. So given all those factors, yes, we are enormously better placed than 12 months ago, and we're looking forward to continue to successfully expand upon those aspects and position ourselves best for the future.
Yeah, the next question that we have is from Chris Turner. What is the need driving the purpose of having to have up to $1 million per annum in salary for execs for such a small company still in the process of growth? The short answer is the degree of difficulty that this company faces in trying to engage remotely in a nascent democracy wedged between two superpowers, and the requirement to be able to interface effectively as a foreigner with the Indigenous government is a skill that is not readily available. It is terribly important to the company that it has successfully obtained that skill. So if it is an essential requirement that we not only have that skill, but we also be able to use the expertise that we have in Australia for CSG, and clearly that expertise has to be paid for on a comparative local basis. It is not at all dependent on your costs of expertise required. Doesn't change because of the size of the company. It's an open market. So all in all, I believe that we have benchmarked everything against comparators. We are paying pretty well, slightly, if anything, below market, but nonetheless, without that expertise, the company has no future. The next question that has been received, in your opinion, are Elixir's gas and hydrogen projects being watched by the industry? Is it considered as potentially significant globally? My opinion, I'll get Neil to add to it. The answer is absolutely yes. You are seeing an incredible gas shortage right across the world. Clearly, the PRC intends to continue to increase its CO2 emissions up until 2030. There is a geopolitical necessity that demand is being met. And clearly, if we can create, from a total greenfield basis, a substantive CSD industry of the size of Queensland, for example, then experience has shown that it won't be long before, in the words of the mafia, you might get an offer too good to refuse. Neil, do you want to answer that any further?
Sure. I think, I mean, there's an obvious measurable example of growing interest, and that is some other peer companies are obtaining capital on the ASX fairly readily to go and pursue similar ventures in Mongolia. So clearly that's a sign of industry interest. On the hydrogen side, I'm aware of some large companies also have recognized some of the locational advantages of this sort of area, although there's nothing particularly public about that just now. In terms of what we do as a company that positions ourselves to engage with the industry is to have a very rigorous technical base for ourselves, to do things properly, to always collect data and keep it and interpret it in a way that is going to be top class and recognized by industry peers if they wanted to engage with us in various different ways in the future. So I wouldn't add much more to that just now, but I think the factors that we've described about the incredibly rapidly changing dynamics in the gas market as reflected by high prices will mean that that sort of interest will only increase.
The next question is, how many wells are we planning to drill in calendar year 2022?
So we haven't said anything official on this, and we go through a process of agreeing a budget with the regulator. And in fact, I'll be heading up to Mongolia shortly, and we'll be working with them as part of the annual budgetary process. But I think it's fairly safe to say it will be an increase on the number of wells that we're drilling in 2021, and that those wells will comprise further exploration wells, further appraisal wells, and of course the pilot production wells, which will range in number. We haven't quite finalized this, from 4 to 6 production wells in that pilot. So I think the key point is that the variety of wells rather than an absolute number, because they can cost quite a bit depending on what their objectives actually are.
Okay. The last question we have is, this company has put a lot of effort recently into the ESG components. When do you think ESG funds, Asian regional banks, will start to invest, fund the project to strengthen the shareholder register? Thanks. The short answer is it's going to be very hard to determine which arm of the company is actually going to increase extra Asian investment, whether it's just ESG or whether it's the ESG combination of the enabling into the future of natural gas. Suffice it to say, the Asian market, financial market, is still willing to invest in energy commodities, notwithstanding what Wall Street or the City of London is saying. But clearly, I think this is a question that goes back to an earlier one. How much interest is our success going to attract within Asia? And we think that the market conditions are absolutely right for that to occur. Whether we can attribute it to one particular component or another, I think it's more likely to be the combination. Neil, do you want to add anything?
Yeah, I think that doing things properly from an ESG point of view, once you're committed to it, is not a lot of onerous extra work. But what it does is it gives the company a vast amount of optionality in terms of the broader universe of potential investors. What it also does is that, for instance, as and when we push forward with our gas-fired generation project, we might want to bring in project finance for that from international financial institutions such as the Asian Development Bank, and that those sorts of bodies are likely to also have ESG prisms, which we believe we would clearly meet. And so that it's not only our own register, but it's other form of financiers at a project level, which this is relevant for.
Okay. I don't think there's any further questions, and in which case I do thank you all for attending and for your questions. And I thank my fellow directors for attending, and for Neil for a sterling job. Well done. I guess it's thank you, linesman. Thank you, ball boys. Thank you.
Thanks all.